Okay, I think we've got a handful of folks online, which is wonderful, and here in the room. So we will go ahead and get started with Director's Cut. I don't think I have any housekeeping, so I will just pass it directly over to Lynn.
Well, thank you, Katie, and thank you all for joining us for the February Director's Cut. Taking a look at year-end production. So the end of 2021, December, is the most recent production data that we have. Not a bad month. Decline in oil production of about 2% and a decline in gas production of about 3%. So another bit of a puzzler there. I suspect that it has to do with the big freeze that came the last week of the month. I had the chance to be in Houston last week for NAPE week and visited with a large number of midstream companies and operators. And I'm sorry about that. And a lot of talk about how after two very easy winters, people were not prepared for a real North Dakota winter. And so we did see a significant impact probably on December production and certainly on January production is coming. So we'll talk about that. But a pretty decent month altogether, permitting pretty much at normal levels. Rig count remained flat. Wells waiting on completion pretty flat, and inactive wells pretty flat. And so not a lot of change to talk about. I want to talk about last week in Houston. So I had the opportunity to meet with CEOs or managers of 10 of our top operators. So out of the, I would say about 12 of our top 25 operators are in Houston. Another 6 to 8 are in Denver. I'm planning a trip down there to do the same. And then there's another half a dozen or so that operate a lot of legacy assets that are in the Dallas-Fort Worth area. And I found a lot of value there. Probably the main theme to take out of last week is the Bakken has been rebranded, whether we wanted it to be or not, as mature. And so, you know, we all face that day when our friends and our significant other call us mature. And for some of us, that's a good thing, and in other ways, not a good thing. But what does that mean? Well, the growth opportunities are considered to be in the Permian. The Bakken and Eagle Ford are now considered mature. So we're looking at very low rates of growth. Some companies just holding their production flat. It has become a real cash cow. I heard that term several times, in that the Bakken has very good economics, and every well that they generate or produce here produces a lot of cash and a lot of revenue. So those are positives, but they're not reinvesting all of that revenue back in as CapEx. A fairly flat level of capital expenditures, and for the most part, with the exception of two companies, flat production or maybe 1% growth. And even saw that in conversations about drilling rigs. So there's some addition of frac crews. Today we're actually, I think our director's cut says 10. That's a week old. We're at 11, but that's not a big difference. We're at 33 drilling rigs. And there's a story behind that. So a couple of the operators have been working hard to add rigs. And in one case, it took them 3 months and 3 attempts at hiring a full crew to actually get the rig out of the yard. So the first time they hired, they put people out, and people took jobs but didn't even show up to be trained. The second time people showed up, and it was the bitter cold part of December, and they didn't stay. And so finally, the third time around, they were able to put together a 60-man crew and bring the rig out of mothballs. So, this whole process started in November and drug on through December and January, and finally early February, they were able to get the rig out. Another company operator trying the same thing, trying to get a drilling rig and crew. Finally, in February, a rig was released by another operator who's backing off a couple of rigs. And so they picked up that hot rig. It's just that hard to get workers. And so the expectation has changed from adding, maybe a dozen rigs over the next year to hoping to add 7. And so again, that's a reflection of a mature basin with slow growth, if at all, pretty much flat production. Everybody does agree that gas production can grow. Even with flat oil production, gas production is going to continue to grow. They're all seeing it in their gas oil ratios and in their well tests. And so, kind of moving on to gas capture, you saw that we gave up 1%, but we stayed, above the Industrial Commission requirements. Company after company talked about they have made a commitment to eliminate routine flaring by 2030 and to eliminate non-routine flaring as soon as possible. So what does that mean? It means that, for example, when things happened in January and gas takeaway capacity diminishes, they actually choke wells back or shut wells in to not go to flare. And in terms of routine flaring, huge focus on finding a way to capture tank vapors. And so if you go to a well site, you see these small, they look like pilot flares out there. Most of those are flaring the very low pressure tank vapors. Lots of work on redesigning production facilities and installing new technology to capture those tank vapors. So most people, their target is in the upper 90s in terms of gas capture. Last thing we'll leave you with there is that oil inventories in the US and around the world are now very low, and it's reflected in the oil price. And so you see oil prices, WTI above $90, and one would have expected activity to really pick up with those kind of oil prices. But in the rebranding of us as mature, that's not the plan. The plan is not to grow production because of $90 oil, but to actually be very disciplined and to offer investors a good return on investment and to capture that cash flow and probably invest it in the Permian, which is still in a growth mode. Most of them did talk about the Permian, and we've had this conversation before about what stage it's at. It is now transitioning from hold your leases by production. Pretty much everything's held by production now. Very little of that going on this year, to growth, like what we saw probably in the mid-teens here in the Bakken. And so that's the characterization of what's happening around the U.S. oil patch. Talk just a little bit about, we did talk to the #1 service company, spent some time with their CEO. There's some really exciting things going on there. They have a new system that they call E-frac or G-frac, where all of the hydraulic fracturing equipment is electric driven, and they can hook to the grid. They can also hook to the gas gathering system and burn produced gas and generate their own electricity. And they are able to reduce hydraulic fracture emissions by 50% with that process. So hugely focused on reducing those emissions. They've stood up something new called HAL Labs, where they're focused on cleaner, more affordable energy. And so they're supporting with their engineering expertise and their network, new ideas and new thoughts on cleaner, more affordable energy technologies. And one of the most fun things to hear about was there was just a shortage of truck drivers particularly in the Permian, Eagle Ford, and even in North Dakota, and especially in the area of hauling frac water and frac sand. So they actually had an employee leave their company and start a new company, and he created an Uber for truck drivers. It's called 5F. So if you own a truck or you want to work as a truck driver hauling frac sand or frac water, you could sign up for the 5F platform. They've got 2,500 truck drivers on there now, and it eliminates the dispatcher and all that confusion and delay in getting a truck to a load and then to an unload spot. And so they've seen a huge improvement in efficiency amongst truck drivers. And they've actually, fully hired all the truck drivers they need in the Permian through this new platform called 5F. So who would have thought we'd have a Uber-like thing for truck drivers? These truck drivers don't ever get out of their truck. They get in their truck and they drive it for their full shift. 5F does all the scheduling for them. It tells them where to go to pick up a sandbox and where to drop it off, and somebody else puts it on the truck and somebody else takes it off. Likewise with the frac water, and all they do is just move it from place to place. So what a fascinating innovation, and it's eliminated a lot of downtime and idle time in the trucking business. So everybody's super hyper focused on efficiency and reducing emissions. On the national front, or the federal front, I guess I should say, just a couple of things. North Dakota did comment on the methane emissions preliminary proposal that came out of EPA. And so that comment period has ended, and now we wait to see what that rule might look like. That was a combined set of comments from DEQ and NDIC. And I don't think they're up on a website yet, but I think I'm going to talk to Katie now that I'm back, and we'll see if we can't get a copy of them up and available on our website. So there'll be a web address where you can go see those comments. A lot of talk about how North Dakota has been leading the nation in terms of emission reduction, and particularly flaring reduction is the low-hanging fruit there in terms of reducing methane emissions. And then the second thing I wanted to talk about was the denial of our court case on the BLM, the pause in BLM leasing. And so we'll see. In large part, it was due to a headline in a newspaper. And so I'm anxious to find out just how accurate that information turns out to be. So they do have to get that sale posted for the protest period by the 1st of March. And if they don't make that, then they're going to miss the first quarter for the sale. So we'll be watching to see, that gives them 2 weeks to get that posted, because they have to do a minimum 30-day protest period in advance of the sale. So that's what's happening on the federal front. That's what's happening in the Bakken. So everybody felt pretty comfortable with Justin's projections of what gas is going to do, even with oil staying flat or in slow growth. So a great deal of interest in how we're going to manage flare mitigation and also the build out of our natural gas infrastructure, but a lot of focus on that. Take some questions.
I'm curious, who determines that it is a mature play?
Yeah, so the question in the room was, who determines that it's a mature play? And I don't think there's any one entity, Dave. It's a industry consensus. And so our top 20 producers or so make that determination. And it was pretty obvious in talking to 10 of those top 20 that's how they have rebranded it. And really, what does that mean? So we are now at a stage where only one out of those 10 companies had significantly more than a 10-year inventory of drilling locations. So that kind of defines what it means to be mature. It means that you've gotten to the point where economically and geographically and geologically, you've only got 10 to 15 years of drilling inventory ahead of you. And so that was pretty much the story amongst all of them. There were a couple of companies that only have a 5-year inventory. But for the most part, it was 10, 10, 10, 10. Then there was one company that not sure they're even going to pick up a rig this year, and they've got a 15-year inventory. But for the most part, it's a 10-year inventory, and it's a consensus amongst the top operators.
So does that mean, just looking that far ahead, 10, 15 years from now, that we just stop seeing new drilling and production just continues on all the existing wells and eventually production starts to go down?
Yeah, so the question was, what does that mean 10 to 15 years out? So it does mean that we have flat to maybe 1 or 2% growth for the next 10 years. But at that point, drilling drops off. And so there was quite a bit of conversation around enhanced oil recovery. And so one of our largest operators is actually testing enhanced oil recovery in the Permian, that they hope to be able to apply that technology up here. Another one or two have been testing it in the Eagle Ford and hope to be able to apply it up here. But yeah, in that 10-year window, if we're going to hold production flat, we have to transition to enhanced oil recovery. And so people feel pretty relaxed about that. They think that's far enough out that they're not, like really super excited about it, but they're all working on technology improvements to make that happen. They all recognize that 80 to 85% of the oil is still going to remain in the rock at the end of that 15-year window. So that's an enormous target. But because it's far enough out, there's not a huge amount of excitement and money going that way right now. But there's interest and there's technology tests going on. And of course, as you know, we have 2 going on in North Dakota. Well, the one in East Fork will start in March. The one in East Tioga has gone through its first injection cycle and is in its first production cycle. So we do have 2 active EOR projects right now. And we got a unitization case on the docket for March 1st. So a lot of interest, but not a lot of excitement.
2 questions. One sort of related to the EOR piece. How much is that kind of consensus among operators? I guess how much does that seem to be reflective of them not having that much confidence in some of these technological advancements or EOR advancements that could continue production in the play? I guess related point, there was a report that Joel Brown put out at the petroleum conference a couple months ago. I don't remember the exact specifics of it, but basically it was looking at all of the ways of getting more oil out of the non-core wells. And I guess I'm wondering, does this seem to be an expression of not too much confidence in the industry's ability to be able to maximize that potential down the line?
Yeah, so the question was, that reflection of interest, but not a great deal of excitement. Is that a reflection of technology concerns? And I think, yes, it is. We've had, if I count correctly, 7 different pilot projects attempt enhanced oil recovery in the Bakken without any success yet. So, and the enhanced oil recovery in the Eagle Ford, which is similar to the Bakken, has been kind of limited. So yeah, there seems to be a significant amount of interest, and it's by the major oil companies that have lots of capital to invest in pilot tests. But there are some real concerns about whether physically it's possible to get that additional oil out of unconventional resources like the Bakken and Three Forks. So I think you're right. I think it's they're cautiously optimistic that they're going to figure it out through one of these processes. And of course, we're pushing it really hard because CO2 and ASO recovery in the Bakken is a significant piece of moving to the governor's goal of, low carbon Bakken and carbon neutrality. So it's a very important piece of everything that we're doing. So we'll continue to push them on it, but they're cautiously optimistic. I think that's the best way to describe it.
And then, I guess on a slightly different note, but related to that consensus, does any of this lack of or hesitation about more investment in the Bakken seem to be related to concerns about flaring emissions as well? Just that with all of the growing concerns about carbon footprints, that it's harder to maintain that in the Bakken versus in a more developed play like the Permian?
So the question was this idea of becoming mature and being very disciplined about capital expenditures in the Bakken. How much is it related to flaring? And I would say an enormous amount. Every place that we went, they wanted to talk about their ESG plans and their gas capture numbers, and they were in the high 90s, and they intended to stay there. And just an enormous amount of concern about that particular metric. And so that does reduce growth rate for certain. And I was commenting before you guys got here that 4 years ago, visiting these same people, everyone was pounding the table wanting flaring variances so they could grow production. They wanted variances and a different flaring policy so they could grow production. In 4 short years, that has made a complete 180 to where keeping their gas capture in the upper 90s is goal number 1. And then if production growth can happen within that paradigm, fine. Yep. So it's amazing the change in just 4 short years.
On the topic of flaring, it looks like flaring on the Fort Berthold fee lands is really, really terrible, 46% gas captured. Can you talk about what's been going on there, particularly in this month? Because I know it's been kind of a problem area, but it seems like this is exceptionally bad.
Yeah, thanks, Amy. So, yeah, the question was, what is going on in the fee Fort Berthold reservation portion and that 46% gas capture? And you can really see, I wanted to highlight really where it is. It's Big Bend. If you took a trip to Newtown in December, you would have seen the whole peninsula lit up and all of the Highway 23 corridor. There was a large number of new wells that came on production there right at the time that the Robinson Lake plant was going through some freeze-off problems and some significant downtime. And so, yeah, it's a short-term problem, we believe. There is a solution in the works. I think I can talk about it now. So in June, there's going to be a pipeline extension from the Grinnell-Hoffland area to Sanish that's going to actually pick up 50 million a day of that gas and take it all the way to the Sanderson plant on the North Dakota-Montana border to be processed. So this has been a bottleneck, as you know, for several months, and it really became acute in December with those new wells coming on, and that was just a timing situation of a lot of new good wells coming on at the same time the plant was having problems. But some really excellent news. There was an acquisition in the north end of Sanish that's going to allow that gas to get into Robinson Lake, and there's a major debottleneck that's going to take place. And so the target is June for, that plant is limited to about 150 million a day. And so they're going to be able to offload 50 million to the west to another gas plant. So that's what we're working on there.
Is there a pipeline developer for that extension?
It is Outrigger. Yep.
Oh, they're developing the pipeline.
Yep.
Okay.
Outrigger is going to lay the pipeline and connect to some piping system that will allow MPLX, the operator of Robinson Lake, to offload that gas from, they have a compressor station at the far north end of their gathering system, and it's going to be rededicated to do nothing except move gas to the west. Yeah.
So that pipeline has been permitted?
I beg pardon?
The pipeline has been permitted.
That's my understanding. Yes.
It's hoping to be operational in June?
Yes. Yeah. So the plan is the right-of-way's all been secured, and the design is done, and the contractor is hired. And so as soon as the frost is out of the ground, the plan is to put pipe in. So that'll really help us this year.
Another question about the Houston conference. We had some conversations months ago about kind of large, I guess, divestment might be the wrong word, but movement of investments in with ConocoPhillips. Wondering if you had discussions with them in Houston, or if you have any kind of insight on any of these sort of shifting investments around and how that might be affecting a couple of years.
Yeah, so the question was, were there any discussions around CapEx shifting and, cash flowing from the Bakken to other basins? And that certainly came up. We were reassured that their commitment to the Bakken remains strong, but again, commitment on the terms of it being mature. And so what happened there was that Shell wanted to exit the United States, and it was just too wonderful an opportunity to say no. So they purchased it, and now they've turned around and sold off some more parts of it. But it is their growth area. The comment was made that there are 1280 spacing units down there where they can install as many as 100 wells. And of course, our biggest one is going to be maybe 25. So the stacked shale benches in the best parts of the Permian offer huge growth potential, even though the wells are probably half as productive, or a rig is about half as productive as in the Bakken. So reassured us that they're very committed to the Bakken as a mature play, but that the growth opportunities are believed to be in the Permian.
Any more questions for
I
Lynn?
have one very serious question to follow up on from several months ago. How many oil wells are in Hardin County, South Dakota?
Did I promised you a number? Oh, no, I did not follow up on that, Dave. How many oil wells are in Hardin County, South Dakota? You can probably count them as you drive down Highway 85, but I will, Katie's making a note. You got the number?
No, not my head.
Oh,
Take me 2 seconds to filter it out. I'm gonna say it back to my desk, so.
Oh, we will get you that number. It's getting fewer and fewer.
all right. Thank you.
Thanks, everyone.
Ready.
Okay, perfect. Well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get started on the production side. You just heard the last question about South Dakota, and I can get that number for everyone of specifics on the county level. But no major changes in our neighboring states that we share our transportation systems with. Eastern Montana did pick up another rig, so they do have one operating rig over on that side of the Williston Basin. South Dakota is still sitting at 0 active rigs. When we look at our month-over-month changes, this is something I've been digging into as well, and if I can find anything out about GORs and kind of seasonality and different things that may be occurring as well, I'll get that out. But I'm curious as well that the percentage shifts. We do expect, again, continued declines when those January numbers come out, both in oil and natural gas. And February so far has been fairly stable from my understanding out in the field. When we look at oil transportation dynamics, you'll notice a piece of the pie is missing for the first time really ever that I've done these numbers. That was a 0% of trucking north up into Canada. And so almost exclusively then the remainder of those barrels primarily moved by pipe. And then we've got a rail segment, and then as well as that localized refining just across the river in Mandan. So on slide 5, you can see again that green line from a percentage basis. Even at the previous years at its lowest, it was in the 1%, 2%, but in December it wasn't 0 barrels, but it was on a percentage basis. It took it down to 0. That Brent WTI spread again, nowhere near the level that would really push barrels away from the pipeline network and onto the rail network. You'll see here in a moment on slide 6. Just a slight slide as well on the estimated barrels moving out by rail car. We're continuing to see the Dakota Access Pipeline as well as the legacy pipeline systems being more attractive options from an economics perspective than some of the rail routes out of the basin. Percentage wise on slide 7, the Pacific Northwest continues to be the dominant area. I was expecting maybe a slightly more shift upwards. I know November is when we had that pipeline outage that was delivering crude oil from Alberta to the Pacific Northwest and British Columbia, but that does not appear to be overly reflected in these numbers. So we'll see if December shows us anything differently. When we look at pricing in the month of November, again, PAD 1, PAD 5, highest price markets. You'll see here in a moment, not only in this slide, but another one, really strong pricing for North Dakota and the Bakken. In the month of December, $4.60 net back. So that was the discount on average here in North Dakota. Again, if anyone remembers historically, it was typically in that $7 to $8 range. And so these dynamics that are taking place across the U.S., if we look on slide 9, Clearbrook pricing over $2.30 premium to WTI for those barrels going through Clearbrook. Cushing, the Midwest as it relates to Brent, only a $1.07 spread as of today. So these are positive things for North Dakota, most certainly. That does help the economics. Again, from the producer, the royalty owners, the state, everyone benefits when that strong pricing makes its way back up here into the basin. And this was that slide in slide 10 for the first time. Again, essentially 0 exports going north of the border. I don't have a real strong marketing answer now of why that was different, but you can see that trend downward for the last little over a year and a half of those export volumes going to lower and lower here over time. So again, I think that has to do with Dakota Access is probably one factor in there when that expanded in August. Again, those barrels that are looking for a marketing home and the strong economics, either at Clearbrook or even down at the Gulf Coast, was just pulling those barrels to those more traditional markets versus get on a truck and heading up north for some type of blending strategy. Slide 11, no change month to month on the flaring. That was identical numbers when we look at the percentages. Month to month here for the last 4 months was solid. And so again, encouraging news that Lynn was sharing. I'm hearing very similar information. When we look at the gas capture challenge and the comments that Lynn was hearing from producers, for the basin, if the producer strategy was to grow even in 5% or 10%, that would be very, very challenging for those two things to work hand in hand, right? To have a high gas capture percentage as well as a strong crude oil production growth. So again, even at flattish or low growth, slow growth in the basin, we're still going to have our work cut out from us from a state and from an industry standpoint to hit those aggressive targets that operators are putting forward. So we'll keep a close eye on this. Again, here in a moment, some of the things that are coming out to help address this. When we look at new wells capturing gas versus producing gas, again, hand in hand, so that's a positive sign for the month of December. Pricing wise, when we look at, again, 2 or 3 years ago, this would have been a major driver for what we could expect in the next 2 to 3 year window. But again, with that steady approach, kind of regardless if oil's $90 or if oil's $70, I think we'll see a very similar type of strategy here in the near term. And so when we look at gas capture requirements, again, 3 things have to be in place. You have to have gathering, you have to have processing, and you have to have transmission. And so for at least the near term, the next year or so, we're in a real good position from just a pure capacity wise from the state's perspective. But when we look at some of those intra-state challenges, Lynn was talking about what was taking place north of the lake, trying to find some of those creative solutions to get more aggressive and moving gas from where it's being produced and flared to where we have open processing capacity, and then looking at what is the next tranche of gas processing needs in the state. We know that even at flat to slight growth in oil, gas growth is going to continue to stay strong and we'll likely start to see that really come on strong here towards summertime. There's a couple other new items. This is a refreshed map, a couple new lines that you'll see on there. Obviously, the North Bakken project, it's a little tough to see, but it's up in that just to the west of that word Hess. That's the WBI system that came online here a couple weeks ago. Again, helping to de-bottleneck some of the challenges north of the lake. And then the other item you'll see on here now, I've included the Wahpeton line over in the southeast corner of the state. And so that is the project that was proposed to deliver off of the WBI line that follows the interstate. And their target in service for that is, again, late 2024 for getting more gas service down into that southeast corner of the state. When we look at Northern Border and that transmission discussion, again, we've now seen, at least in the last couple of weeks, that those volumes, the market share, start trickling back up. This has been altered dramatically in the month of December, January, where we had shut-ins not only in the US but Canada, so the numbers are a little bit wonky. But again, the trend is what I want folks to focus on. We'll get back on that trend line here as we move into spring and summer. And those concerns on transmission capabilities out of the basin continue to rear their head. One solution, I'm going to back up, Katie, to slide 16. One solution that was recently proposed, if you look down in the southeast corner of North Dakota, there's a red pipeline, WBI Energy, as it's called, the Grasslands Pipeline. And so that system here, in January, they held an open season starting January 10th, and that open season closed January 28th to essentially reverse that line out of North Dakota down into the Wyoming marketplace. Not a massive when we look at volume, but 94,000 decatherms of volume, which again, for those on the unit side, what does that mean? Ballpark about 90 million cubic feet of gas per day. Depending on how you calculate it, but yeah, so that's roughly the scale of what they're looking at. They have not released any of the results of that open season, so we don't know publicly yet whether they're going to move forward with that project. But again, from a timing perspective, if they did move forward, the target in service on that was fall of 2023. So a relatively quick hit type solution as we're looking at these constraints coming relatively quickly, especially at the strategies that producers are having here in the basin. And then from a gas quality perspective, last thing I'll touch on here on slide 18, again, we're still below that 1100 level. I've not heard any news or nothing on the public side about, whether or not we'll see any type of efforts to put an upper limit on the BTU numbers out of the basin. So again, that's still, at least in the near term, not an immediate issue for discussion. With that, Katie, I'll be glad to answer any questions.
Questions in the room for Justin?
I've got one. This is a different project that you didn't touch on, but there was the news a week or so ago about Bakken Energy for their hydrogen hub sourcing natural gas from Fort Berthold.
Yep.
Can you just talk about what sort of additional infrastructure, if any, might be needed in Fort Berthold in the years ahead to facilitate that?
Yeah, so good question. There weren't any details. So the question for those online was about the hydrogen hub at the current DGC facility near Beulah. Regardless of where that tailgate gas, so what happens, again, that discussion of gathering, processing, and then transmission. Regardless of what happens on the transmission side, whether that would go into WBI or whether it went to the northern border or whether it goes to DGC, those areas of the state will need the traditional expansions of gathering, processing. No details were made public about who would be doing that for that solution. But again, regardless of that news, it's very safe to say that expansions on Fort Berthold, off Fort Berthold, statewide, are going to need to continue to happen. It'll be really interesting in the coming years. One of the concerns, kind of shifting gears away from Fort Berthold, but with these aggressive targets for gas capture, as we look at areas of the state, Williams County, Divide County, places that have at least some footprint of gas capture systems in, real questions of whether or not those will be adequately sized for these new targets that companies have. So we're looking at, again, what type of new infrastructure will have to be, paralleling existing footprints. And it's one thing to build it for 91% capture. It's another to build a system for 97% capture or 99% capture. So those are all discussions off reservation, on reservation, that will need to continue to be worked out.
On that hydrogen project, I don't know if any sort of more details have come in since the release came out about it, but have you gotten any more of a sense, I guess, for what the logistics would be in terms of that agreement with MHA and what that would entail as far as the producers in the area and the gas plants facilitating all of the gas, facilitating that agreement, I guess, that all of the gas would be coming from the reservation?
Yeah, so the question was about the agreement and how that would work with the MHA Nation as well as Bakken Energy, and I don't have any other details of how that contracts are currently structured, if there would be any alternate, things that would need to change there or how that would all look. So yeah, I don't at this time.
Are things still coming along as they have been in terms of interest in the cross-state natural gas pipeline?
Yes, so good question. I failed to mention that. So we've got a couple deadlines coming up. Here, March 1st will be the deadline for applications for the Grand Forks portion, the Grand Forks County carve out. And then May 1st, we'll have the applications coming in for the cross-state, the west to east pipeline solution. So more to come on that, but the first glimpse we'll get here is in just a couple weeks when that Grand Forks piece comes out.
Does the Grand Forks piece become permanent, or is that just a stopgap measure until the main pipeline is done?
Oh, good question. So is that the question was about whether or not, the permanence of, so it would be a fixed asset. It would be new pipe in the ground that would be connecting some system. Again, those details aren't necessarily out there. There's a number of them, but that would be pipe in the ground that would be used for the duration of the operational life. Yeah.
And just to follow, are there other gas plants on the drawing board right now?
Yes, so there are more gas processing projects that folks are looking at. The question is not if, but when and how big and where are the biggest questions right now.
maybe one other on DAPL, the ongoing efforts to double capacity. Just curious if you've heard any chatter on the timing of that full expansion.
Nothing, so right now, 750 is the number that I'm continuing to use for the capacity on that system, and I've not heard an update of when that may go up to the full 1.1. Yeah.
All right, I think we're good.
Thank you.